Hello viewers, I am back with another episode of Bhaskar's Insurance for You and Me series. In our health insurance episode so far, we have seen the coverage terms and conditions under one type of health insurance policy, where the claim amount is related to the amount of medical treatment expenses. Are you aware that there are health insurance products known as benefit products, where the claim amount is not related to the actual treatment expenses? Rather, the products provide for flat amount of claim. To help understand this, we will discuss in detail the different types of health insurance products in this episode. One of the ways of categorizing insurance products in general and health insurance products specifically is to classify them as indemnity products and benefit products. The indemnity products are those where the maximum claim amount receivable is equal to the loss suffered by the insured. In case of indemnity health insurance products, the claim amount receivable is equal to the insured treatment costs only. The various details of coverage under health insurance discussed so far in our earlier episodes relate to such indemnity products only. In these products, the actual amount of treatment cost is calculated and paid to insured by the insurer, subject of course to the sum insured being sufficient and other policy conditions being followed. The benefit-based insurance products provide for payment of lump sum amount as claim for treatment of disease or accident during the policy. Like indemnity health insurance policies, these policies also respond when the insured is hospitalized for treatment of sickness or accident. These products provide for payment of fixed benefit amount based on diagnosis or duration of hospitalization, etc. The major difference is that these benefit policy claim amounts are not linked to the actual hospital expenses incurred. The insured person, while undergoing treatment, may also incur some expenses which are not part of the treatment cost but necessary to incur during the treatment. For example, some of the non-medical items like telephone charges, guest services, walking aid charges, extra diet charges, etc., are not part of treatment cost. Similarly, the attendant cost, the transport cost for attendant for visiting the hospital from home is not part of treatment cost. Sometimes the patient may have to undergo long-term treatment at home even after the completion of post-hospitalization period. So all these expenses considered as out-of-pocket expenses are not part of hospitalization treatment cost, but necessary to be incurred. These are not covered under most of the indemnity products discussed by us. So the benefit type of health insurance policies help to take care of such situations. We will now understand two such benefit products, a hospital daily cash product and critical illness insurance product. These products are available either as separate products or as add-on covers under regular health indemnity insurance products category. In both the cases, the scope of cover remains same as what we will discuss now. Also, both these benefit products can be purchased independent of indemnity health insurance product. What it means is whether you are covered under regular indemnity health insurance or not, you can be covered under hospital daily cash product and or critical illness product. Now we'll have a look at hospital daily cash product coverage. These products provide for a fixed amount of benefit on per day basis to the insured person for the period of hospital stay related to the treatment. Generally, these policies provide for two types of payments. One is a daily cash allowance for the treatment period based on the benefit amount chosen by the insured while proposing for insurance. And the second, in case the hospital stay exceeds certain number of days as fixed in the product, an additional lump sum amount would be payable, which is called as convalescence benefit. For example, a daily cash hospital product may have the benefit as below. The daily cash allowance of rupees 3,000 per day payable for a maximum of 20 days in one policy year. The amount may be higher in case the hospital stay is in ICU. Similarly, convalescence benefit of rupees 20,000 payable in case of continuous period of 10 days hospitalization, payable once in a policy year. So these values shown here, they are all samples just to understand how a hospital daily cash product looks like, and it varies depending on the product and the plan chosen. There could be some additional add-on benefits in some of the products which are not discussed here. The claim amount payable under this policy depends on the number of days the insured stayed in the hospital for treatment and the plan chosen by the insured. The documents required to be submitted for any claim under the policy should provide details of the diagnosis, past history, number of days of hospitalization, and the treatment details to justify the hospital stay duration. There is no need for justification of hospital expenses incurred. As you can appreciate, the advantage of the daily cash policy is that the claim amount is not limited to actual treatment cost alone. So besides the treatment cost, the expenses which are not payable under regular health insurance policies due to non-payable expenses, application of sublimits, exhaustion of sum insured, etc., also get automatically included in the claim amount depending on the sufficiency of per day benefit chosen by you. Next, looking at the critical illness insurance product, the second product under the benefit category, these products provide for payment of a lump sum amount based on the insured sum insured in the event of diagnosis of an insured critical illness. In simple language, the term critical illness can be understood as severe sicknesses with long-lasting effect on the vital body organs. Some of the examples of such critical illnesses generally covered under these policies are cancer of specified severity, stroke resulting in permanent symptoms, first heart attack, kidney failure requiring regular dialysis, neurosurgery, blindness, end-stage liver disease, etc. There are many different critical illness insurance products in the market. The number of critical illnesses covered under these products vary from product to product. Hence, one has to go through the list of critical illnesses covered under each of these products before deciding on which product to buy. This particular product is important for us as consumers. The treatment of these critical illnesses are expensive and also require long-term care even after the person is discharged from the hospital. The regular indemnity-based health insurance may not be sufficient to cover the entire hospitalization cost, and some of the costs incurred for long-term nursing care after discharge from the hospital are not covered under such indemnity policies. So the occurrence of these critical illnesses is of low probability, but once it occurs, it can cripple the patient financially as the treatment costs are very high and prolonged medical nursing support would be required. So the critical illness insurance takes care of such conditions by providing for lump sum benefit amount on diagnosis of the illness without relating the claim amount to the treatment cost. Further, the premium rates under this product is relatively less when compared to a regular indemnity health insurance products. Hence, this policy is very useful and affordable product to be included in your insurance portfolio, particularly health insurance portfolio. Understanding the definitions of critical illnesses is very critical. The critical illnesses covered are defined in the policy wordings. These definitions provide the precise symptoms and their severity which qualifies the illness to be considered as a critical illness. The trigger for a claim under this product is diagnosis of any of the insured critical illness as per the severity indicated in the definitions of the policy. If any of the defined illness occurs, but the severity does not match with the defined severity, the same does not qualify as a critical illness. Just to repeat, if any of the defined illness occurs, but the severity does not match with the defined severity, the same does not qualify as critical illness and the claim is not maintainable. This is an important aspect to be remembered for this product. As an example, I am showing the definition for kidney failure requiring regular dialysis, one of the critical illnesses, on the screen. If you see, while this cover is for kidney failure, the definition makes it clear on the minimum condition, that is, A kidney failure becomes an insured critical illness only if the renal disease is end stage with chronic irreversible failure of both kidneys to function. So similar conditionalities will apply for other critical illnesses also. As an example for claims under critical illness product, let us suppose the critical illness insurance policy is taken for a sum insured of rupees 10 lakhs and the insured person is diagnosed with cancer as defined in the policy. The insured is eligible for 100% of sum insured as a claim. This percentage can vary from product to product and for different illnesses depending on the product chosen by you. But some of the products may also provide for a differential percentage of sum insured as benefit for different severity levels of the disease. For example, 100% of sum insured may become payable for cancer of specified severity, whereas 25% of sum insured may be paid for early stage cancer. So the policy would define both the cancer of specified severity and also early stage cancer. So similar kind of differentiation would be available in some insurance products for different critical illnesses. The amount payable under this policy do not get reduced even if the treatment cost is less than the sum insured. There is one important condition appearing in some of the critical illness products known as survival period. The policy specifies that the claim under the policy is admissible only if the insured person survives the specified survival period duration. And the survival period is the period from the date of diagnosis of the critical illness. As we have seen, the major purpose of this product is to provide for financial support to take care of long-term support needs of the person who is suffering from any of the critical illnesses. In the unfortunate event of the person not surviving the survival period, the need for such a support does not exist. Hence, these policies provide for survival period clause. Generally, these periods range from 15 days to up to 90 days and sometimes even beyond 90 days also. To summarize the three products, let us consider an example. Let us suppose that an individual has the following three health insurance products. A regular indemnity health insurance product for a sum insured of rupees 3 lakhs. The second, hospital daily cash insurance policy with per day benefit of rupees 5,000 for a maximum 20 days and convalescence benefit of rupees 15,000 if hospital stays beyond 10 days. And a third policy of critical illness cover where the policy covers 40 critical illnesses including cancer and sum insured of rupees 10 lakhs. Assume that the insured covered under all these three policies is hospitalized for 12 days for cancer treatment and discharged after incurring hospital bill of rupees 3,50,000 during the policy period. And let us also assume that no exclusions are applicable in this particular case. The indemnity health policy will pay for hospital expenses. Hospital daily cash will pay based on the duration of hospital stay. Critical illness policy will pay based on the diagnosis. So the claim amount each policy will pay to the insured will be as under. The indemnity health policy will pay rupees 3 lakhs being maximum sum insured as actual expenses beyond the sum insured. The hospital daily cash policy will pay rupees 60,000 and the hospital cash being for 12 days at the rate of rupees 5,000 each and rupees 15,000 as a convalescence benefit. The third critical illness insurance policy will pay a lump sum of rupees 10 lakhs if the cancer diagnosed is of severity as specified in the policy wordings. So the summary of what I have explained now is shown in the screen. So this actually gives you how each of these policies complement each other to cover all the expenses related to the treatment of a disease. Now this example indicates the utility of the benefit policies. Now we have seen in this episode the details of two benefit health insurance products. We will discuss some of the frequently asked questions related to health insurance in our next episode. Until then, bye from Bhaskar.